Hello, fellow traders. 'Tis I, the Rumpled One. It's Thursday, November the 8th, the year 2018. Let's talk trading. Is it working? Is what working? Is your trading working? Is your method working? Is your discipline working? There's a lot of different pieces, and they all need to work. They need to work together. So when you say something like my trading isn't working, you really have to define what it is and what working means. I mean, if you're saying, I've been trading and I'm not making any money, well, you're going to have to figure out what's the reason. There could be so many reasons. And usually, first thing is to cut down the variables. In Forex, only trading one pair. If you're trading stocks, only trade one stock. Only use one method. Maybe you only make one trade a day rather than making, 10 or 20 trades a day. So you really have to look at what's not working and define that for you. I can't do it for you. I can give you suggestions of what to look for, but you have to figure out what isn't working. Now you might say an indicator isn't working. You mean it doesn't load properly, it gives bad values. Well, there's two things to do. You can either ask the coder to fix it or not use that indicator because it's not working for you. One of the reasons I bring that up is the 3-level ZZ indicator seems to, in one way, it's standing the test of time because people are still using it. But most people really don't understand it. They say it repaints, they say, you see it and you don't get the reversal. Well, the thing is, it's a breakout indicator. It's not a reversal indicator. It can be used as a reversal indicator, and I like to use it that way, but you have to understand it's a breakout indicator. So it says, hey, price is broken out. Well, usually after price breaks out, it reverses. And most people just don't understand that because as far as I know, it really didn't come with any documentation. And I'm not even sure where the initial post is. If anybody knows, it might be really good to go back to the initial post. And I've heard, and I don't know if it's true or not, but the original coder that did it is dead. So I mean, we may never know. Like I said, I'm not 100% sure. That's just a quote unquote rumor. Have to call it rumor until I know it for a fact. Um, but anyway, so let's just start taking a look here. One thing I know that works is money and risk management. So you might want to start there because if you're not using money and risk management, that might be the only adjustment you need to your trading. Okay, the monthly euro yen. Look at this. We've passed the midpoint. We're 234 pips off the low. We are 218 pips, 217 pips right here above that. The previous month's close, which would be the top of the previous month's lower wick zone. And as we look here on the weekly chart, you see we're now 62 pips above last week's high. We broke out of the upper wick zone for the week. So once again, if you're a long-term trader, you can take these trades and just sit back and see what happens. I mean, if it reverses on you, you'll get stopped out. But if it doesn't, there's a lot of pips to pick up, a lot. And we can see here it's Thursday and we still have 4 pairs that have not filled the gap. On the daily, we almost hit the previous day's high, but we reversed. So we're still in the previous day's upper wick zone, and it's a pretty good size upper wick zone. But you can see here we only have 1 pair with the range over 100. So kind of a lackluster day so far. I mean, euro yen only clocking in at 47 pips. But if we look at the buy zone, we can see that there were pips to be made. We almost got a short trigger, but that's not good enough. You can see the pivot point was right near the open, so not much of a daily bias there. We had a long trigger that resulted in a possible win anywhere along the lines here. We had another buy trigger, which resulted in a win. Now, these here were not buy triggers because the H1 was red inside the buy zone. Unless you're a pro trader and you want to drop down to M15 or M5, but sticking with the original, trading with the H1 candle color in the zone, once again paid off. The rat zone, as you can see here, we put in a low right there at the beginning. We put in a high. Had a red rat reversal, not much distance between here and here, only 7 pips, but it did pay off. And you can see here, we coming out of the zone. So basically leaving the rat zones have paid off. And right here, we've got a Larry live trade going short at 92. Once again, we took out the pivot. You can see how it's bunched up here. And we're above the weekly R1. So chances are we're not going to hit the pivot this week. Maybe we'll pick up that missed pivot, weekly pivot next week. On the daily, you can see here, we're hundreds of pips away, or over 100 pips away, over 200 from the 2 open pivots. Once again, we took out this pivot a couple of days ago, that missed pivot. Now, as mentioned before, the 3-level ZZ indicator, you can see here it signified a breakout. Then we had red at the line, which happened to be a double O or triple O, however you want to call it, the 130 line, and then it was good for almost 30 pips to the south. And then we put in a 2-ball, green at the line, and we got another 20 pips to the north. So once again, you can see here, put in a 2-ball, came down, tested, didn't break reverse, long at the line. Very simple. And also, I mentioned yesterday, I had a tiny bug, didn't really affect anything except the gauge here. But you can see here waiting, we don't count the waiting pips because it's no price movement, not past the selling point or the buying point. And as you can see here, we just had a sell trigger because the ask dropped below the peak of the bid. So there's 1.8 pips was a potential. You can see here, this can be used, this gauge, to tell you, is price really moving or is it just kind of waffling? So you can see here, it's not, when you get the buying and you get the selling, you haven't even had 2 pips worth. And you can see here, we're in a wait stage once again. You see we had a tiny bit of buying. So how to use this in this particular case, what you're going to look for is, I like to use, we're going to use the H1, right? We're looking at the 3-ball, and then we're going to say, okay, price is moving which way? According to the candle, we're moving down, but right now you can see we're stalled here. And now we just picked up some more selling. So since the buying hasn't really pushed it, even in a pip, you can see, and we can just ride that candle color. You can see here we only got 1 pip out of that last sell push. So it's not really moving that hard. And now we just got a little bit more buying. I'm sorry, a little bit more selling there. Selling. So see, we're getting the selling. So, and you can, I've got this set for 10, but I believe you can have, you can fill up the screen and then you can see what the preponderance is. Okay, we just had a little buy, but that didn't last long. We went right back into the wait state. So once again, you can use this to really pinpoint your entries and pinpoint your exits when to take profit. Because you can see how many ticks and you can see how many pips. And you can almost use this as a standalone, but I like to use this in conjunction with the various methods because I like to use this to help timing. Because when this says, hey, I see this right at the line, okay, I want to get in when the selling starts, not when it's buying, because that's when you'll get the push up this way. And the 5 lines from the previous day, high, close, mid, open, low. We're just taking candle color crosses at the line. And we have a substantially sized wick zone, so you can see here price still left it a few times, but right now we're in it. Price probably going to try and leave it once again. Holo, we just had a holo short here at 130.01 right there. Nice trade. Inventory reduction bars. You can see there was a short trigger at 93 and another one at 90. You can see prices now coming out and we have a long trigger at 129.969. And one of my favorite trades, but once again, as you can see here, there were no triggers on this particular chart. So you just have, if this was what you were trading, you would just have to wait. And that's okay. Because you see, sometimes what's not working is you're not waiting for the trade, you're forcing it. You don't want to do that. And you can see here the selling right here. Here's the peak of the bid. You can see it peaked there. And then the ask came right down through. And you had a little bit more buying, but then we had more selling start right here. And so this is the tick indicator, tick chart indicator I wrote. And once again, if you hit F9, you get this screen. And this is the tick chart. Standard. I like to also plot a few other lines, but you can see right here when buying, when the selling came down, there was that peak. It just didn't quite break it. And see, that's where I got the whole idea from how to time your entries, because it always would seem I'd enter the trade and it would immediately go against me. It's like, why? Well, I figured it. I figured it out finally. You see, if I wait for price and I buy right here as the bid's going across, you can see very little drawdown, and price went my way. And that's what that was the missing piece. And here on the Einstein line, there was a trigger, a couple of pips, trigger short, couple of pips. And you can see from the tick chart, or you can see here, there's just not much movement. Even though, okay, we had 223 ticks with 2 pips movement. So if it reverses, it's time to get out because it's just not moving. Just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks.